Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world and its many documents. And today we are looking at a current report from FS Credit Real Estate Income Trust, Incorporated, a company that deals with real estate investments. And let me tell you, this report has some interesting tweaks to their borrowing arrangements that could really change the game for them, so FS Credit. Real Estate Income Trust Incorporated is essentially a company that pools investors' money to buy and manage real estate, and they need money to operate and grow right, so they borrow money from banks and other lenders. And this report is all about a big change in one of those borrowing deals. It is like getting a new, bigger credit card with better terms, and that is always interesting to see. Now, FS Credit Real Estate Income Trust Incorporated, you can think of them as a big investment vehicle focused on real estate. They've been around a bit, and this particular report is about a specific loan agreement that is pretty important to their operation. The big news here is something called the Fourth Amendment to the Amended and Restated Loan and Servicing Agreement for their MM-1 facility. This might sound super technical, but it is basically an update to a major loan agreement that the company has. This amendment was officially put in place back on the 27th of October, 2025. The borrower on this agreement is a subsidiary called FS Create Finance, M-1 LLC, which is part of the larger FS Credit Real Estate Income Trust Incorporated family, and they updated this deal with Wells Fargo Bank National Association as the main agent for the lender's Massachusetts Mutual Life Insurance Company and C. Life Insurance Company are also key lenders here. So what changed? Well, the most eye-popping change is that they've increased the total amount of money they can borrow under this facility from $1 billion to a whopping $1.5 billion. That is an extra $500 million. They can now access a pretty significant expansion. And it is not just about having more money, they're also getting it on better terms, the interest rate they pay on this money. The applicable spread has been reduced. This means they will be paying less interest on the money they borrow, which is great news for their bottom line. It is like getting a discount on a huge purchase. Another crucial update is that they've extended the date when this loan agreement is supposed to be fully paid back. The maturity date has been pushed from September 2031 all the way to September 2034. This gives them a much longer runway to manage their debt and operations without the immediate pressure of repaying such a large sum. And very importantly, this amendment also allows them to use this financing for specific real estate properties that they own. This means they can leverage their existing property portfolio to get more funding, which can be a smart way to unlock value. Now, with all this new borrowing and increased flexibility, there is also a bit of a safety net put in place. The company itself, FS Credit, Real Estate Income Trust Incorporated, has entered into a guarantee agreement. This means they are guaranteeing the payment of certain obligations under this new loan deal. But here is a key detail while they are guaranteeing it. There is a limit, the maximum amount the company has to pay. Under this guarantee is capped at 25% of the outstanding loan amounts, specifically tied to those real estate owned assets. This is a smart move because it protects the parent company from unlimited exposure while still providing assurance to the lenders. This whole loan amendment and guarantee is also making its way into another section of the report. It is classified as the creation of a direct financial obligation or an obligation under an off-balance sheet arrangement. This just means it is a significant financial commitment that the company is taking on, and it needs to be clearly reported. And as is standard practice for these kinds of reports, all the exciting details of these agreements are attached as exhibits for anyone who wants to dive deep into legalese. You can check out Exhibit 10.1, which is the Fourth Amendment itself, and Exhibit 10.2, which is the guarantee agreement. These are the actual legal documents spelling out all the terms and conditions. Looking at Exhibit 10.1, we see the full list of who is involved in this significant loan amendment. We have FS Create Finance, -1 LLC on one side, and then Massachusetts Mutual Life Insurance Company, Siege, Life Insurance Company Bearings Direct Investments LLC, and FS Create Finance Holdings LLC, as well as other listed parties on the other side. It is a comprehensive agreement involving quite a few players, which is typical for large financing deals. Then we have Exhibit 10.2, the Guarantee Agreement. This is the document showing that FS Credit Real Estate Income Trust Incorporated is stepping up to back certain obligations under that big loan agreement. It is that protective layer we talked about earlier, ensuring lenders have some recourse. And finally, there is Exhibit 104, the Cover Page Interactive Data File. This is standard for modern SEC filings. It is basically a machine-readable version of the report's cover page that helps with data processing and analysis for investors and regulators. Now let's talk about what this all really means for FS Credit Real Estate Income Trust Incorporated. This is a clear sign that the company is looking to expand its capacity and likely acquire more assets, or perhaps refinance existing ones with better terms. The increase in borrowing capacity from $1 billion to $1.5 billion is a massive vote of confidence from their lenders, particularly Wells Fargo, Massachusetts Mutual, and C. Might the reduced interest spread from 2.30% to 2.05% might seem small, but on a facility of this size over many years it translates into millions of dollars saved, which directly boosts profitability. Extending the maturity date to 2034 is also a strategic masterstroke. It gives them much needed breathing room in their financial planning, reducing short-term pressure and allowing for a more stable long-term growth strategy. The fact that the guarantee is limited to 25% of the advances tied to those real estate owned assets is a smart risk management strategy for the parent company. It shows they are willing to back the venture, but not to the point of jeopardizing the entire corporation if things go south with those specific assets. Sir, this is what Warren Buffett would call prudently managing risk in terms of company direction. This move suggests an aggressive yet calculated growth strategy. They are clearly aiming to grow their real estate holdings and are securing the necessary capital and favorable terms to do so. The risk here is obvious. Any significant downturn in the real estate market could put pressure on their expanded debt, but the company seems to be mitigating this with diversified financing and a capped guarantee overall FS credit real estate income. Trust Incorporated is making a bold move with this amendment. They are showing ambition by significantly increasing their borrowing power and securing better financing terms. This could lead to substantial growth and increased returns for investors if executed well. However, like all leveraged investments in real estate, there is always the inherent market risk to consider. Alright, that is our breakdown of this latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this expansion is a smart move, or are there hidden risks? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into corporate documents. Don't forget to check out the Discord linked in the description below for even more discussions. Thanks for watching. See you next time.